This is a potential short trade setup for ANTM Anthem. It's a component of the healthcare sector. We have a primary trend line off the April lows of 2020. We put in a divergent high. We have negative and bearish divergences continuing to construct on all three indicators, going even dating back as far as March of 2021 of last year. And I believe a solid break of that 443.27 ought to issue a sell signal, especially a crack below that 438.21 price support. We got a pretty nice volume at price around this range of that 451.16-ish, and sort of got this really a head and shoulder looking top. Not the greatest aesthetically, but I believe again it's got some room. You know, we got to remain patient, wait for these breaks to happen, see if we get them, and we'll see how that plays out. If we do zoom in on the 4-hour time frame, pretty significant. Again, a little bit of a smaller divergent high here. Negative and bearish divergences where we already have crossovers on the MACD and oscillator as well. Sort of in an inflection point here. That's 4-hour 50-day moving average. And I believe a crack below that will not only cross over and confirm these negative divergences, but they will also probably crack to the zero line on both the MACD and oscillator. And, you know, again, we're probably done to retest that primary trend line. And, again, one of these breaks below these key levels, and these would be issued my first targets. That 438.21 also will coincide with the 4-hour 200-day moving average support. So that's why I believe that's a pretty dang key level. Really great support in my opinion. Plenty of reaction dating back to October and November of last year as well. And we'll see if we get it. You know, maybe we don't get it. Maybe we come back down here. Hey, that's where if you're bullish on this stock, that's where you'd step in. Try to swing it right back up above. But if we do break below 443.27 and do crack below that 438.21, I got first target here at 419.92 for a 4.8% drop, 399.80 for a 9.26% drop, and we got a pretty nice air pocket in between after that, down to 363.98, which would be 0.618 Fibonacci retracement down for a 17.5% drop, which will be some really pretty decent support there, and that's where I'd favor it the most. Beautiful looking trading range here with a volume at price level 2 as well here on the daily time frame. You could even probably gun for some support there at that 383.75, but we'll see if it plays out. We'll see if we even crack below. We'll see if we get that sell signal. Just an overview of the healthcare sector here. This is the biggest component of the healthcare sector in XLV, and we've already broken down right off this primary trend line, off the one of the March highs, March lows of the COVID crash here. We already had a breakdown here. We sort of got this trading range here where we might even have could really form a death cross between puncture of the 50-day and 200-day moving average, but we've cracked below here. We kind of came back up, we back tested, came back down, back tested it again off that primary trend line, got ever so rejected, came back down here in a waterfall formation, came back up, back tested that 50-day moving average, and here we are again. We back tested it again, and sort of in a free fall stance here. This is, bear in mind, a near-term downtrend with lower lows and lower highs. So I best believe if XLV goes and XLV starts trending downwards, you best believe that it'll take Anthem with it.